Do you want to know the real deal? The biggest mistake that I see business owners make isn't bad bookkeeping or missing deductions per se. It's believing that they should make less money so that they don't have to pay more in taxes. And I can't tell you how many times I've heard this. Things like, we're trying to spend down profit so we don't get crushed at tax time, or we don't want to look too successful on paper, or we'd rather not show too much income. That mindset, it's costing you way more than taxes ever could. And today I'm going to show you why limiting your income out of fear is a trap. I'm going to show you how to shift into a strategy-first approach that allows you to grow your business with confidence. We're not just talking about theory here. I'm going to actually break down real examples, show you what the IRS is actually looking for, and share proven tax strategies that you keep more of your money without ever needing to hide it. So if you've ever hesitated to scale because you were afraid of Uncle Sam showing at your door with a big check bill, this episode is for you. And I just, again, want to reiterate this. Someone came to me the other day and it broke my heart. And they said, I don't want to make any more money because I'm afraid too much profit is going to face too big of a tax bill. Or I hear people say at the end of the year, I'm going to go out and buy a new truck just to lower my profit. Or I hear someone say, I just want to quit my business because the tax bill stresses me out. And I just want to stop there and say, I get you. I'm a business owner. I've been a business owner all my life, and I get you, and I've been in your shoes, and I know what that feeling is. This can be stressful, but you have the opportunity to take this by the hand, and you have the opportunity to change it. And that's what we're going to talk about today, to give you that opportunity to change it. So I just want to talk about a concept that all of this is related to. And that concept is that taxes are a percentage. So let's go through a quick example. Imagine you're in the 24% tax bracket and you earn $100 more in your business without any additional deductions. You're going to pay $24 in additional taxes because of that. 24% tax bracket, $100 more of income with no additional deductions. You're going to pay $24 in taxes, but you still have an additional $76 in your pocket. So I just want to put that concept because I hear so many people say, I don't want to earn any more money because it's just going to go away to taxes. Yes, there is going to be tax, but that's whether you're a business owner, whether you're a W-2 worker. There's tax on any kind of income, or most of the types of income that you have, but just know it's a percentage. It's not 100%. So if you're in that 24% tax bracket, you make $100 more in your business with no additional deductions, you're putting $76 in your pocket. That's good news. So I just want to hopefully open up that concept to say, don't be afraid to make more money in your business. More profit with correct tax planning can lead to less taxes. And that's exactly what we're going to talk about today. And the reason that this thinking of, I don't want to earn more profit is dangerous is because it leads to a lot of bad things. We've seen people underreport income illegally because they're afraid of this profit thing. They have this income and they say, well, I didn't receive a 1099, so I'm not going to report it. Or they did a bunch of side jobs and they got cash. They say, well, I'm not going to report that. Well, that's illegal. And so that can lead to a bad thing. That can lead to a dangerous decision when there's opportunities that you can use a tax strategy to help instead and be above board and do things legally. This concept of lowering profit also leads to wasted spending at year end, where they go out and they go buy stuff that they don't need, but they do it to lower their profit. This mindset also leads to missed growth opportunities. And I faced this in my own business back in the day too. I would say, I'm not going to grow my business because I don't want to deal with the tax bill. And I also see that this type of thinking leads people to hesitate to scale or hire employees because, again, they just don't want to grow because they don't want to face the tax bill. And I want to go through a story. I had a member at tax home. His name was John, and every year he would go buy a new truck or a piece of equipment every year in December. And he'd call Mike, I'm at the dealership, I'm buying this vehicle or I'm buying this piece of equipment. And these vehicles and equipment would literally sit unused or barely used the next year because he didn't need them. He was just going out and buying things to lower his profit, but he didn't actually need these things that he's buying. So let's look again at that 24% example. He would buy, let's say, a $100,000 vehicle, and he would save $24,000 in taxes. So he would reduce his income by $100,000 if we used special depreciation and everything else. But let's say we did, and he was able to take that deduction the full year. He'd buy a $100,000 vehicle in the 24% tax bracket. He's going to save $24,000 in taxes. But he spent $100,000. So he is still out $76,000. He got a discount on that vehicle because he saved $24,000 in taxes, but he was still out cash $76,000. So that is the concept that we want to be thinking about. I want you to change that mindset to say, there's a better way. We can do smart tax planning to make this work. So instead of saying, hey, if I make $100 more in the 24% tax bracket, I'm gonna have to pay $24 in taxes, and that makes me upset. But you got an extra $76 in your pocket. Where if you go out and buy something for $100 that you don't need, sure, you save $24 in taxes, but you're out that $100 or $76, whatever's left over. So there's a better way to think about this, and it all comes around to smart tax planning. Now, real quick, if you're looking for tax strategies that you can actually implement, I built a software called TaxSound, where we just don't show you how to save on taxes. We help you turn those tax strategies into real dollars saved with clear, step-by-step guidance and full implementation with you. So if you're serious about paying the least amount of taxes legally possible this year, click the link in the description and book a free discovery call with our team. All right, now back to this concept. So I also want to debunk some of the ideas or misconceptions about this. You know, the core problem with this entire profit mindset is poor planning. If you are a strategic tax planner, profit isn't a concern. But we always see this problem come from poor planners or people that don't plan at all. And so they say, well, I'm not going to plan, or my planning is going out and buying that truck that I don't need. Or my planning is to not take that extra job because I don't want to make more income. But that's not planning. That's just not growing your business, the opportunity that you have. There's also some myths of where people say it can raise a red flag when you have more profit, and that cannot be further from the truth. The IRS wants you to be profitable. The IRS wants all businesses to be profitable. So being more profitable, I heard this one, being more profitable does not raise a red flag with the IRS. But what more profit does do is it brings with more planning opportunities. So let's talk about some of those smart tax strategies that you can implement to help reduce your profit. Smart tax planning. Remember, this isn't going out and buying something you don't need. This is smart planning. And the core piece I want to start with is this idea of maximizing deductions, because I think this is the root of so many tax strategies. And this is the concept of after-tax spending versus pre-tax spending. And after-tax spending is like a W-2 worker. Let's say that you have your W-2 worker, you get your wages, gross wages, and you have all these taxes taken out, and then whatever's left over is your take-home pay, and then you go out and you buy groceries, you pay your house bill, do all these different things, but all that spending you do is considered after-tax spending because that money's already been taxed. Now, as a business owner, let's flip the switch. As a business owner, we have sales or revenue in our business, and then we have all these expenses that we use to reduce our sales, and then whatever's left over is our profit. And our profit is what we get taxed on. So any spending that we do inside of our business is considered pre-tax spending. Because it doesn't get taxed, the profit is the piece that get taxed. So spending we do inside of our business is considered pre-tax spending. Spending we do outside of our business is called after-tax spending because that money's already been taxed. And so also often I talk to business owners, and this is a lot of what we talk about on our YouTube channel, in my book, The Small Business Tax Savings Handbook, on our podcast, is this concept of after-tax spending versus pre-tax spending. How do we move spending that we're going to do no matter what from after-tax spending, find a business purpose, and move it to pre-tax spending? And there's a lot of different concepts around this. You can think of things like the home office or automobile. The home office, let's stop at that one for an example. The home office is an example. That is an expense that you're gonna have no matter what. But now as a business owner, you get a tax deduction for it. Or maybe automobile or meals or travel expenses. How can we turn travel that you wanna do anyways, but now we're finding a business purpose for it, and we're making that travel that we wanna do a business related expense? Or maybe technology purposes, or maybe you're setting up a board for your business and you're taking advantage of meals and travel around that. Maybe you're hiring your kids in your business. This is a big one. You know, as a parent, we're always supporting our children, but could we get a business deduction for it? Could they maybe pay no income tax on that payment that we're making to them? There's opportunities for planning there, but you have to do it smart. Again, this is taking spending that we're already doing, but now we're finding a business purpose for it. We're moving it from after-tax spending into pre-tax spending. And that is smart tax planning. That's not going out and buying a truck that I don't need. This is taking money that we were going to do anyways but now we're finding that business purpose for it. And so there's a lot of planning opportunities there that we want to make sure that we're taking advantage of. No longer do we have to be afraid of profit, because guess what? We're taking advantage of all these strategies that the government has given to us, and we're using them to our full advantage to lower our profit the right way, the way that we know we can. And guess what? If at the end of the day, we've done everything we can to lower our profit and we cannot do it anymore, that means you're doing really well. That means you have a lot of good income. And guess what? There's still probably some more strategies you can implement. So let's talk about the next strategy, the S-Corp Election. This is a big strategy that we like to implement once we see businesses start to hit about $50,000 or more in profit in their business. And this is a strategy that we use to help lower the amount we pay in self-employment taxes. Let's say you're making $100,000 a year. If you're a sole proprietorship, no S corporation, you're gonna pay your regular income tax rate plus self-employment taxes on that full $100,000. If we do an S-Corp election, we're gonna split your income into a salary piece and a distribution piece. That salary piece, we're gonna still pay self-employment taxes, which is 15%, but that distribution piece, we're not paying, we're avoiding self-employment taxes on. So let's look at that example. If you were making $100,000 a year, let's just say that we determined that your salary was half of that. So a reasonable salary for the work you're doing was $50,000. We're gonna pay self-employment taxes on $50,000, but we're gonna avoid it on the other $50,000. That's a huge win. That's a huge win. And all that is just a tax strategy that we need to understand and then correctly implement, which we do at TaxZone. We help people every single day implement all these strategies that we're talking about. Maybe you want to contribute to retirement, and maybe you're going to get a deduction today to help defer some of that income, like grow into a retirement account. Maybe you're looking at a solo 401k or a SEP IRA, or if you have employees, you're starting another 401k or a simple IRA. There's planning around retirement contributions that we can do. We also talk about entity structuring. You know, if you have multiple businesses, how do we juggle that? How do we best set that up? Do we set up a holding company? What does that look like? We have a very strategic structure that we like to see those being set up as. You know, we also open up the door with health savings account, funding that, and then we can get a deduction from that to help lower our income. Maybe there's charitable strategies where we're giving money to charity, but that's helping us in a tax planning way. There are a lot of opportunities. We talk about real estate. You know, a lot of people invest in real estate to not only grow wealth, but to help lower their tax bill. And so there's a lot of planning that we can do that is so much better than just saying, I'm not going to make more money because I don't want to pay taxes on it. Or I'm going to buy something I don't need just to get a tax break on it. Or I am going to quit my business. I heard someone from this. I'm going to quit my business because I'm afraid of this tax piece. I'm just sick of dealing with this tax piece. No. Let's change that script and say, I want to grow my business. I want to continue to scale my business and grow and grow and grow. And I'm going to use smart tax planning to wrap around that growth to make sure that I'm paying the least amount of taxes as legally possible. And guess what? If I can't get all the way down to zero, or I can't get all the way to where I want to be, that's okay. Because we're making money, we're doing well, and we're never gonna have 100% tax. Remember, tax is just a percentage. We break down all different types of strategies, all different types of planning, all within TaxZone, where we help people from start to finish. We help them fully implement these strategies. Now, with this concept, there's also kind of the opposite end of the spectrum. There's people that say, my income is too low, and we should probably do an episode or a topic on this, where they say, my income's too low, I can't get a loan, or I'm trying to sell my business, but they're saying it's not worth anything because I've utilized everything we talk about at TaxZone, and my profit is low, and they say it's not worth anything. Well, there's different workarounds we can talk about there. If you can't get a loan because your profit's too small, find a lender that understands small business, and we can talk about them with add backs and how do we get some add backs in there for some of the items. Or maybe you're looking to sell a business. Sometimes we say, hey, we're just gonna have to suck it up. We're gonna have to pay a little bit more tax, not take advantage of some of the expenses that are available to us, because it's gonna bring us a potential sale down the road that's gonna produce a much bigger impact than that. Now, most often than not, I'm not encouraging that, but sometimes there's ways that we're gonna analyze that, and that's what our team at TaxZone does with business owners every day. So again, I just wanna kind of wrap up and talk about this concept. I don't want people to say, I don't wanna make any more profit because I'm gonna pay taxes on that. Remember, taxes are a percentage. If you're in the 24% tax bracket and you make $100 more, sure, you're gonna have taxes of $24 on that $100, but you still get to put $76 directly in your pocket. That is a net positive. Think about it that way. Don't think about it the opposite way. More profit, with correct tax planning can lead to actually less taxes. Think about that. This is very dangerous when we think about this profit piece, because it leads to, when people are scared of making too much profit or showing too much profit, it leads to illegally underreporting income, or doing wasted spending at year end that they don't need to do, or missing growth opportunities, missing a big deal that can really change the landscape of their business, but they don't want to do it because they don't want to pay taxes on it, or they're hesitating to scale their business because of that fear. That's not where I want you to be. That's not where you need to be. Remember, the IRS wants people to take advantage of what's available to them. It's important that the more profit we make, the more planning opportunities that open up, and the more that we take smart planning into our hands. Now, when we talk about smart tax strategies, we talk about this concept of maximizing deductions and turning after-tax spending into pre-tax spending. And that includes things like the home office, automobile, meals, travel, technology, setting up a board for your business, hiring your kids in your business. These are things we talk about every single day on all of our social media channels, as well as within TaxHelp. We talk about maybe using the S-Corp Election to help limit the amount that you're paying in self-employment taxes. Maybe we're funding a retirement account. Maybe we're making sure our entity structure is set up. Maybe we're investing in real estate. Maybe we're investing in other businesses that are producing losses that can help offset different things. We're probably fully maxing out an HSA. Maybe we're doing charitable strategies to help lower our taxable income. Whatever it is, there's opportunities out there. They're not super complex. You just need to know what's available to you and how to implement that. And that's exactly what we do every single day here at TaxHelp. We help people implement those things. So we don't want you limiting income. We want you empowered by additional income. Again, we don't want you limiting income. We want you empowered by making additional income. You know, once John, that I talked about before, that was always kind of buying things at the end of the year, a piece of equipment, truck that he wasn't using anymore. Once he stopped fearing the tax bill and started doing smart tax planning with TaxHelp, he doubled his income and kept more than ever. Doubled his income, but kept more in his pocket than ever and paid less in taxes. That's pretty powerful. So let's wrap this up with one simple truth. Taxes should never be the reason you don't chase profit. Smart strategy beats fear every single time. If you've been holding your business back because you're worried about what success will cost you in taxes, remember this. The real cost is what you're missing out on by playing small. At TaxHelp, we specialize in showing business owners like you how to build wealth the right way. That means keeping more of what you earn legally and ethically by using the tax code to your advantage, not hiding from the tax code. If you found this helpful, hit that like button, subscribe, and share this with someone else who's been stuck in that profit equals pain mindset. And be sure to check out TaxHelp and book a free discovery call via the link in the description to show you how we can take you from tax pain to tax savings with complete implementation assistance. Remember, more income doesn't mean more stress if you have the right strategy. Thanks, and I'll see you on the next one.